This is Moriyama from T&D Holdings. Thank you very much for taking the time out of your busy schedule to attend today's IR meeting. Today, I will first explain the share transfer of T&D Financial Life to PayPayCorporation and others announced by a press release yesterday, as well as the comprehensive alliance with the company. So please move on to page 4 of material 1. First, I will outline the overview of this transaction. We have agreed to transfer out of the 85.1% stake we hold in our consolidated subsidiary, T&D Financial Life Insurance Company, 70.2% to PayPayCorporation, and 14.9% to an affiliate of asset management company, One Investment Management. The transfer value for the 85.1% stake is approximately 160 billion yen. We will retain a 14.9% stake, which will be subject to options with PayPay. Specifically, PayPay will hold a call option exercisable after the transaction completion date, and we will hold a put option exercisable from 3 years after the completion date. The transaction is scheduled to close on October 1st, 2027, subject to regulatory approvals and completion of IFRS-related processes for consolidation into the PayPay Group. The proceeds from this transaction will be used for strategic investments aimed at strengthening the group's resilience and for shareholder returns through the acquisition of treasury shares. In addition, employees' employment conditions are expected to be maintained for the time being after the transaction. Page 5 provides an overview of PayPayCorporation and One Investment Management. Please turn to page 6. On pages 6 and 7, I will explain the growth trajectory of T&D Financial Life. Over approximately 25 years, the company has promoted its insurance business in the bank assurance channel and the independent agency market within our group. Through agile product offerings in response to changes in market trends, the company has steadily expanded both annualized premiums from new businesses and the balance of in-force policies. Please turn to the next page. Next, I will explain the earnings trend. With the expansion of in-force policies, profitability has also improved, and in the fiscal year ended March 2025, the company achieved profitability in maintenance-related income. As shown in the figures, T&D Financial Life has already achieved growth in both business performance and profitability. Please turn to the next page.
Meanwhile, in light of changes in the business environment in recent years, we have been considering the future growth strategy for T&D Financial Life. As a result, we concluded that transferring a controlling stake to PayPay, which possesses strength not available within our group, is the best option to accelerate initiatives in new growth areas, in addition to achieving sustainable growth in its core bancassurance market. PayPay, leveraging its payment platform, provides financial services such as cards, banking, and securities to over 74 million registered users. Going forward, PayPay aims to further enhance T&D Financial Life's existing business while offering comprehensive financial services tailored to users' life stages by adding life insurance products to its user base. Furthermore, by utilizing One Investment Management's expertise in asset management, particularly in alternative investments, we expect to enhance asset management capabilities, which form the foundation of product competitiveness. Through these initiatives, we believe T&D Financial Life will transition to a new stage of growth beyond its current trajectory. Please turn to page 10. Next, I will explain the comprehensive alliance with PayPay. Alongside the execution of the share transfer agreement, we have entered into a basic agreement with PayPay to promote collaboration primarily in marketing and digital domains. By leveraging AI and digital technologies held by SoftBank, both companies will explore services that enhance customer convenience and contribute to solving social issues. Specifically, we aim to achieve both growth and efficiency by combining the group's expertise in health promotion, nursing care, and medical fields with PayPay's and SoftBank's fintech capabilities, customer base, and AI digital technologies. The alliance is expected to cover multiple areas, including insurance sales channels, advertising marketing, operations, and new business domains. Please turn to the next page. The initiatives currently under consideration are as described. While the details will be further refined through ongoing discussions, these initiatives will enable us to simultaneously expand our customer base, improve operational efficiency, and create new value. At present, discussions have been initiated with Taiyo Life, which focuses on individual customers, and we will further expand collaboration with other group companies going forward. This concludes my explanation of Material 1. Next, I will explain Material 2, Group Long-Term Vision, Try and Discover 2030, Breaking Beyond. Now please turn to page 3 of Material 2.
In this presentation, I will focus on the key points of the group long-term vision following the transfer of TDF Life shares, the specific strengths of the group's long-term vision, and shareholder returns. The main points are as described on the slide. Since I will explain the details in each respective section later, I will omit further explanation here. Please turn to page 5. Here, we once again outline the T&D Insurance Group's target vision and the positioning of our group long-term vision. Our group places our corporate philosophy since the inception as our highest overarching concept. Under this philosophy, the group long-term vision, Try and Discover 2030, Breaking Beyond, is the collective term for our group management vision, our target profile for the next 5 years, and the group growth strategy based on the 3 fundamental policies to realize that vision, and our group KPIs. Please turn to the next page. Next, I will explain the objectives of our business portfolio review. 2 major points to this trend. First, the selection and concentration of our core businesses, and second, sustaining growth and enhancing capital efficiency. Through this review of our business portfolio, we will advance the selection and concentration of our core domestic life insurance operations around Taiyo Life and Daido Life, which possess unique business models. By further concentrating management resources to these core businesses, where profit growth is highly anticipated, we intend to sustain the growth of our core operation and further enhance capital efficiency. Furthermore, regarding the independent agency market, which is characterized by its high susceptibility to changes in the external environment, this review ensures that our group will no longer operate a specialized entity in this segment. Instead, we will establish an optimal structure that allows us to engage in this market. Next slide, please. Next, I will explain how this review of our business portfolio connects to the advancement of our group long-term vision. The center of the slide illustrates the overarching structure of the group long-term vision presented on April the 3rd, while the right side details the current initiatives. First, the transfer of T&D Financial Life shares listed on the right was executed as part of the proactive business portfolio management shown at the center of the structure. The cash proceeds generated through this transaction will be allocated to Strategic Policy 3, Strengthening of Group Resilience, as indicated by the red arrow, thereby accelerating the construction of the solid management foundation. Simultaneously, the comprehensive alliance with PayPay, shown at the top right, is an initiative to accelerate Strategic Policy 1, further strengthening of the core businesses, through the enhancement of our customer base, as shown by the arrow leading into the central the diagram. By reinforcing both our core business and the group management foundation at the same time through this capital recycling, we will lift the certainty and speed of realizing our long-term vision, while establishing a robust management foundation that paves the way for growth beyond the horizon. Next slide, please. Next, I will explain the cash generated by the TDF Life share transfer and its allocation. T&D Life became a member of our group in October 2001, and our total investment to date amounts to 102 billion yen. Over the past 25 years, despite crises such as the global financial crisis, the introduction of negative interest rates, and COVID-19 shock, its EV grew to 184.6 billion yen in the fiscal year ended March 2026. Through this share transfer, we expect to secure cash proceeds that exceed the EV as of the fiscal year ended March 2026. We plan to allocate this net of tax cash proceeds on a roughly 50-50 basis between strategic investments aimed at strengthening group resilience and shareholder returns through share buybacks. Please turn to the next page. The financial KPIs for the group long-term vision remain unchanged from the figures announced at the presentation on April the 3rd. Although revenues will temporarily decrease due to the divestment of TDN Life, we will enhance the likelihood of achieving the KPIs of this long-term vision by allocating the group's released management resources into the shareholder returns and investments to reinforce our core businesses. Please turn to the next page. On this page, I will explain the process for achieving our adjusted net income target of 230 billion yen for the fiscal year ending March 2031, after deducting the earnings of TDF Life and one-time gain losses for the fiscal year ended March 2026. The primary driver of profit growth is the expansion of positive spread, backed by rising interest rates. Our group's policies in force are expanding steadily, creating a structure that is highly sensitive to the benefits of rising investment interest rates. Furthermore, the growth of policies in force is expected to steadily increase mortality and morbidity gains. We view these two items as highly predictable profit drivers. On the other hand, operating expenses are projected to rise due to inflation, wage increases, and IT investments, and we recognize that controlling operating expenses is a major challenge. For overseas business and growth investment, we intend to accumulate additional profit through new strategic growth investments, alongside the steady earnings expansion of TDAC's existing investees. Please turn to the next slide. To promote sustainability management, we have established two primary material issues: improve social value and human capital development, with specific key themes defined for each material issues. By setting non-financial KPIs and targets for each key theme and working towards their achievement, we will pursue sustainable group growth while contributing to the resolution of social issues. In this long-term vision, we have newly established the talent with diverse backgrounds and attributes as a KPI. Human resources are a vital capital for our sustainable growth, and we will continue to advance the enhancement of our human capital. Please turn to the next page. From here, I will explain the strategies of Daido Life and Taiyo Life regarding further strengthening of our core businesses, which is a fundamental policy in our long-term vision. First, Daido Life. Through various initiatives that support the expansion of corporate protection and the explanation of new business domains, Daido Life will accompany SMEs in delivering both security and growth. Specific details of these initiatives will be explained in the following page. First, we will steadily expand the policy amount in force by deepening our presence in existing markets through the evolution of our traditional comprehensive protection approach. Furthermore, we aim to pivot back towards an increasing trend in the number of corporate clients by expanding our business domains and strengthening our platforms to build touch points with a wider range of SMEs. At the same time, we will improve productivity by integrating AI into our sales activities. In addition, by developing and promoting non-insurance businesses that address expanding social and management challenges, we will expand our customer base and build sustainable businesses in non-insurance domains. Through these initiatives, we will contribute to the further development of SMEs while expanding our business performance and earnings. Please turn to the next page. Next, I will explain the initiatives of Taiyo Life. Taiyo Life has traditionally deployed face-to-face sales models centered on sales representatives conducting joint door-to-door visits and has built its customer base through the sale of short-term savings products and annuity insurance. Subsequently, in response to changes in the financial environment and the diversification of customer needs, the company has engaged in product development that accurately captures customer demands, such as introducing dementia insurance ahead of the industry in 2016. In recent years, as shown in the middle of the material, we have worked to improve productivity by evolving our operations into a hybrid sales model that utilizes direct digital data combined with face-to-face sales. Going forward, we will achieve further evolution of our business model by deploying product strategies tailored to changes in customer segments and needs, alongside refining our information strategy through the comprehensive alliance with PayPayCorporation and others. In addition, we will pursue productivity improvements by strengthening our sales structure through branch management transformation and reinforcing our management foundation using AI technology. Please turn to the next page. Next, I will explain the direction of the profit structure transformation that Taiyo Life will undertake during this long-term vision. Taiyo Life will pursue the long-term improvement of its policies in force portfolio by reducing legacy policies with profitability challenges, such as individual annuities and bancassurance products sold in the past, while steadily accumulating highly profitable new business. Specifically for bancassurance, we will reduce policies in force through strict risk control, while focusing heavily on the sales representative channel to drive both quality improvement, as represented by new business margins, and volume growth centered on market expansion. Please turn to the next page. So PDCA cycle will be used at Taiyo Life to steadily enhance the initiatives to enhance the revenue. So we have breakdown the profit. So we have the various initiatives as listed here will be implemented. So in terms of the mortality gains and morbidity gains, as well as the positive spread will be expanded. And based on that, in terms of the progress of the initiatives, on a quantitative and qualitative basis, monitoring will be provided. So the new business margin and also the annualized the margins, as well as some of the asset management related indexes will be confirmed on a regular basis. So the PDCA will be conducted. So the life insurance is a stock business. It would take time to conduct the revenue restructuring. But in terms of the progress of these initiatives, on an appropriate manner, we would like to share those in various IR briefing. Please move on to the next slide.
Next, I will explain our external growth strategy. As explained at our Investor Day on April 3, with the goal of increasing the proportion of adjusted profits generated outside the domestic life insurance business to over 20% by FY March 2031, we have established a 500 billion yen investment budget. What I'd like to emphasize today is that we prioritize quality over quantity in our investment decisions. Rather than investing simply because we have a 500 billion yen budget available, we will maintain disciplined capital allocation and rigorously evaluate whether each opportunity contributes to enhancing a corporate value. Specifically, we will invest only in opportunities that are expected to generate returns exceeding our hurdle rate, which reflects not only the cost of equity but also factors such as domestic and overseas interest rate differentials. If suitable investment opportunities offering returns above the hurdle rate are not available, we will consider shareholder returns while taking into account our capital position and other factors. It should also be noted that the strategic investments representing approximately 50% of the after-tax cash proceeds from the transfer of TDF Life shares, as explained on page 8 under the use of cash proceeds, are positioned separately from the 500 billion investment allocation presented on this page. I will now explain our initiative to enhance group resilience on the next page. Over the very long term, we anticipate management challenges arising from the external environment, including increasing margin pressure due to persistent inflation. Through our DX strategy, we will first aim to reduce operational costs and reinforce sales capabilities in order to enhance our ability to generate financial capital. Furthermore, we will promote the circulation of financial capital through the capital management framework we have strengthened under the previous long-term vision. In addition, the adoption of AI will significantly transform both the roles of people and the group's talent portfolio. We will review our organizational structure and other frameworks to maximize human capital and strengthen resource allocation toward areas that create value for the group. Furthermore, by leveraging group-wide data as a form of intellectual capital, we will make management decisions that are optimized for the group as a whole and executed with greater speed and agility. By organically integrating the various effects generated by our DX strategy with our ERM and asset management strategies, as well as our organizational and human capital strategies, we aim to enhance and accelerate the management of intellectual and human capital, in addition to financial capital, thereby maximizing group synergies. Next page, please. This page illustrates our vision for the DX strategy in concrete terms and shows how achieving that vision will contribute to the creation and circulation of the group's financial, human, and intellectual capitals. Please turn to the next page. Across the group, our companies have already leveraged IT and digital technologies to improve sales productivity and streamline routine operations, including contract administration, achieving tangible results such as improved sales performance and reduced workloads. Going forward, we will promote the full-scale utilization of AI across all group companies and business functions. We will further improve efficiency and reduce workloads in back and middle office operations, while enhancing customer value in front office functions through the combination of human expertise and AI. In advancing our DX and AI initiatives, the holding company and each group company will accelerate development in line with their respective business characteristics, while also establishing a common group platform that takes into account efficient deployment across the group, future scalability, risk management, and AI governance. In addition to the group's DX strategy promotion committee, we have established an integrated group-wide governance structure, including having the executives responsible for DX at Taiyo and Daido concurrently serve at the holding company and have formulated concrete development plans. Next page, please. Let me explain how we intend to rebuild our organizational structure and talent portfolio through our DX strategy. Across the group, we have approximately 6,000 administrative employees, excluding sales representatives. To date, each group company has improved efficiency primarily in routine administrative operations and has redeployed branch office administrative staff to sales support functions. Going forward, we expect AI agents and other technologies to drive significant efficiency gains across both routine and non-routine work. Through these efficiency gains, we will create human capital and accelerate its redeployment toward profit-generating functions, including sales, asset management, and new business development. To achieve these objectives, we will position human capital management as a key group priority and promote initiatives including creating an environment that enables greater talent mobility, developing and acquiring specialized talent for the AI era, and transforming our organizational structure and talent portfolio into their optimal forms. Please turn to the next page. From here, I will explain our corporate governance initiatives. With the new long-term vision in place, we have clearly redefined the role of the board of directors to include setting the strategic direction for the group as a whole, overseeing business execution from an independent standpoint, and determining the appointment and compensation of group management through both offensive and defensive governance. To enable the board to fulfill these responsibilities more effectively, we aim to achieve majority outside directors and increase female representation at an early stage of this long-term vision period. As an initial step this fiscal year, We will enhance the independence of the board through measures such as separating the roles of board chair and president, increasing the ratio of outside directors to 50%, and raising the ratio of non-executive directors to 75%, thereby promoting faster decision-making and more effective oversight. Next page, please. We have also reorganized the skills expected of the board into 3 categories. Under three broad categories of group-wide strategy, medium to long-term value creation, and reliability and discipline, we defined 9 skill sets. We have also added important themes such as AI and DX, as well as human capital management. Under the new structure, the board as a whole maintains a balanced mix of knowledge, experience, and expertise, which will further enhance the effectiveness of its oversight function and contribute to sustainable corporate value creation. Please turn to the next page. Next, I will explain the revisions to our executive compensation system. We have increased the proportion of performance-linked compensation and stock-based compensation so that group management is more strongly aligned with medium to long-term corporate value creation and the achievement of both financial and non-financial KPIs. Through these changes, we will further encourage appropriate risk-taking by management and strengthen value sharing with shareholders. The newly introduced performance-based stock compensation scheme incorporates evaluation metrics such as group-wide capital efficiency, TSR, and non-financial indicators, and is designed to strengthen integrated group management and governance. Please turn to the next page. I will now explain our shareholder return policy. As part of shareholder returns for the fiscal year ending March 26, we have decided to conduct a share buyback with a maximum amount of 30 billion yen. Combined with the cash dividend of 63.6 billion yen already announced, total shareholder returns will amount to 93.6 billion, resulting in a total payout ratio of 59.1%. Please turn to the next page. There have been no changes to our shareholder return policy, but I would like to reiterate our thinking behind it. Beginning with the fiscal year ending March 2026, our policy is to pay dividends equivalent to approximately 60% of the 5-year average of group adjusted profit. Under this framework, medium to long-term profit growth will directly translate into higher cash dividends. With the share transfer of T&D Life, the cash proceeds will not be included in the adjusted profit, which will be the source of the shareholder return. Next page, please. This slide outlines our approach to the total payout ratio. As explained on April 3rd, in addition to a cash dividend, we aim to achieve a total payout ratio of approximately 60% of the medium to long term through share buybacks funded by earnings generated during the period. With today's announcement of a 30 billion yen share buyback, this was announced yesterday. The total payout ratio for the fiscal year ending March 26, including cash dividend, will be approximately 60%, which is consistent with this policy. In addition to returns funded by earnings, we will also consider additional share buybacks after comprehensively evaluating factors such as growth investment opportunities, ESR levels, and share price levels. As a return of earnings or as a capital management measure, we do not intend to fix the timing of share buybacks. Instead, we will make comprehensive assessments of our financial condition, growth investment opportunities, market conditions, and share price, and execute repurchases in a timely and effective manner when we determine that their impact will be most meaningful. Please turn to the next page. As explained during our earnings conference call on May 15th, our internally managed ESR declined from the previous fiscal year end and stood at 222%. As shown on the slide, if domestic interest rates rise by 50 basis points, our ESR would decline by approximately 5 percentage points. In addition, although preliminary, we are disclosing regulatory-based ESR figures for the first time. The consolidated ESR stands at 216%, and the breakdown of the 3 life insurance companies is shown on the slide. Next page, please. This slide is from the material used at our long-term vision presentation on April 3rd. As a group, we will pursue EPS growth through steady profit expansion in our existing businesses, incremental earnings generated by growth investments, and share repurchases. However, short-term EPS growth alone is unlikely to support a higher valuation multiple. Therefore, we will work to strengthen growth expectations while reducing our cost of equity, thereby enhancing investor confidence in market expectations and ultimately improving our price to earnings. We also believe that initiatives aimed at improving our PER will contribute to sustainable EPS growth over the medium to longer term. Furthermore, we will continue to increase dividends steadily in line with our shareholder return policy and strive to enhance TSR. This concludes my presentation. Thank you very much for your attention.
Thank you very much, President Moriyama. So now, Honda-san, please. So this is Honda. So I would like to briefly provide additional explanations on 3 technical points regarding the questions we receive frequently after yesterday's press release. The first point concerns the use of cash proceeds from the transfer of T&D Financial shares on page 8 of Material 2. First, the source of funds for this cash allocation policy is based on the gross transfer price from the transfer of TDF Life shares, rather than the accounting gains on the sales. Next, regarding the taxes shown in the bar chart on the far right. This tax will be levied on the capital gain arising from the share transfer. However, the exact amount has not been finalized at this time because it depends on the book value at the timing of the closing. Note that the consolidated book value will be at the level close to the total amount of shareholders' equity at the time of the transfer. Also, the tax basis had not been finalized because we applied the group tax sharing system, and certain tax adjustments will occur at the time of the sale. While the tax applies to the taxable gain calculated by deducting the tax basis from the transfer price, as I just mentioned, the book value at the time of sale and the tax adjustment amount are variable depending on the exact timing of closing. Therefore, refrain from disclosing specific figures. So, in terms of the cash after 100%, it would account to about 50%. It will be conducted on lump sum basis. But in terms of the actual timing, we would like to disclose. Please move on to slide 26.
The 30 billion yen share buyback announced for FY March 2026 is something that I'd like to comment about. The 30 billion yen share buyback announced was for FY March 26 and is separate from the shareholder return associated with the TDF share transfer that we discussed earlier. Please keep this distinction in mind. In addition, the shareholder return during the current long-term vision from FY 26 onward will be carried out in accordance with the policy explained earlier by Mr. Moriyama, separate from both the 30 billion yen share buyback and the share buyback associated with the transfer of TDF shares. Page 29, please. The impact of the share transfer on ESR will depend on the valuation date, but excluding the effect of the share buybacks discussed earlier, we expect ESR to improve by approximately 2 to 3 percentage points. Economic capital, which forms the denominator, is expected to decline due to the reduction in risk associated with the transfer of TDF shares. On the other hand, a surplus, the numerator, will also decline due to the tax burden arising from the transaction. As the reduction in economic capital is expected to outweigh the decline in surplus, ESR is projected to increase modestly. If we execute a share repurchase equivalent to approximately 50% of the after-tax cash proceeds, ESR is expected to decline slightly relative to the pre-sale level, but it should not be a material change, so ESR should stay nearly flattish. That concludes my supplemental remarks. Thank you.
Thank you very much, Honda-san. So we would like to move on to the Q&A session. If you'd like to ask a question, please click the raise hand button at the bottom of your screen. We will send you an unmute request in order. And once you have unmuted yourself, please state your question. So please limit your questions to two for each person. You're welcome to pose as many times as you like. So we would like to take the first question. So I would like to introduce the first questioner. SMBC Nikko Securities, Muraki-san, please. Please unmute yourself and start your question. So this is Muraki from SMBC Nikko Securities. I have two questions. First question relates to the T&D financials. Slide 7, please. So for the sales or the transfer, what were some of the discussions and what were some initiatives that have taken place? That is the first question. So several years back, there were discussions that because of the low profit and so forth, there were some discussions that they may, whether we would consider transfer or not. And since then, there have been an increase in the enforced policies. So since then, what sort of discussions had taken place? And the second question, so within the medium-term period, the cost is expected to increase by 35 billion yen. So cost management is essential, as mentioned in the presentation. So if you go to slide 20 of the main presentation, or 21, you have talked about the personnel strategy and so forth. So what is the actual target through these initiatives? So as a holding company, what would be the KPIs they would set for Taiyo Life and Daido Life to manage the progress? And through these, what sort of financial the KPIs can be expected to improve? So that is the second part of my question. So I would perhaps respond to the first one. And thank you very much, Muraki-san. So regarding the T&D financials transfer, what were some of the discussions prior to that decision? Actually, for a fairly long period of time, we've conducted the discussion. So I'd like to summarize that. About 5 years ago, we have been focusing on the business portfolio management. So every year, discussions have been underway. So in terms of the bancassurance business itself, there were discussions as to the outlook of the bancassurance business. So this particular business, right now, we are in the world with positive interest rate. So the funding has become much more important. So this is definitely a business that has borne that responsibility. Also, in terms of the market size, it is quite significant. So that means there is a market with potential. But on the other end, the competitive climate continues to be stiff. So we cannot actually generate much margin. Also, they are prone to be impacted by the operating environment. So the sales amount volatility is significant. So this is a channel that is rather difficult for us to control. So first thing first, we have been evaluating the nature of the business itself. So unless we have certain level of size or scale, we cannot address those issues. So that has been some of the ideas discussed. Now, the current state of the T&D financials. Was under Itasaka-san, the previous president. So there were initiatives to enhance the product development capabilities that had started 5 years ago or so. And now Morinaka-san, who has been the vice president of the holding company, has become the president of T&D Financials. So they have been conducting measures to enhance the sales capability in the sales itself. So because of that, there has been recovery in the policies and increase in the enforced policies. So in terms of the one-off related gains and losses, it became a positive. And EV, it has been actually enhanced to 180 billion or so. So we have been able to conduct value enhancement. So we have been evaluating and reviewing the business and the initiatives. So that has been conducted at the board level. So whether we would conduct the transfer or not, we looked at the future prospect for T&D Financials and the stability of the business. Also, we discussed whether this is the optimal business portfolio or not. So as a pure play company, it is difficult to continue the business. I have already mentioned that in my presentation. As we look at the future prospect and stability, we need to have certain scale, and that includes the capital efficiency stability as well. So as a dedicated company, to continue to hold that under the group, that is a challenge. Also, the bank assurance channel. As mentioned already, the market itself is quite large, and we can conduct the funding through that. But in terms of the business portfolio, we can actually compensate or supplement that through the Taiyo and Daido Life's business. Also, on an indirect basis, we have Fortitude as part of the group. So through the seeding, we can actually have the earnings on an indirect basis. Another point is the transfer price. So because of the initiatives we've taken in the past 5 years, EV has been enhanced, and the financial situation has improved. So more than one times EV, that has been the evaluation we've received because of the various value enhancement initiatives. So you may wonder, what is the corporate value? So T&D Financials grows under the PayPayCorporation. It would be further possible to further grow the gross. And also, the proceeds from the transfer, we can allocate those towards strategic investment, and that would accelerate the realization of the targets for the long-term vision. So given the risks and the profitability prospect for bank assurance channel, given all those into consideration, we have decided to transfer. So we will be allocating the cash generated through this transfer, and we believe we can achieve higher level capital efficiency and sustainable growth. Also profitability, capital efficiency, and risk balance. So we believe we can have the optimal the business portfolio. So that was those were some of the reasons for a decision. So those are some of the summary and the initiatives that have been discussed at the board level. That is all. So I would like to please continue. So this is Moriya. I would like to answer related to the second part of your question. In terms of the operating expenses, in terms of what sort of sense of urgency that we have for the holding company. So with the wage increase and inflation, the operating expenses has been on the rise, and we deem that this is an important management issue. So at HD holding company, in terms of the individual operating companies, the expenses, we look at whether it is cost effective vis-a-vis the initiatives, and also we have been strengthening the monitoring, inclusive of the cost management. So we are consulting with each company, and on a regular basis, we are confirming that at the holding company's board level. So under inflationary environment, with a rate hike, we are seeing a positive spread increase. So there is improvement on the earnings side. So for the group, so rather than just simply reducing the costs, in terms of initiatives that may lead to future growth, on a selective basis, we would like to execute those. Also, for the individual initiatives of the each company, it might be difficult to deal with this rise in the operating cost. So rather than that, we need to look at the long-term perspective of the environment, the shortage of the labor, and also changes in the competitive environment. We need to address this on a group-wide basis, and that is why DX strategy is underway. So slide 21 for this slide. So starting from the DX strategy, we will be reallocating the human resources, so we can reform both the cost structure as well as the revenue structure. And also we have it in the slide 20 as well. So with the AI utilization, before the administration, sort of indirect operation efficiency was the main usage. But also in terms of the task that was dependent on the humans personnel, we believe we can make this more efficient. So 30 to 50% reduction could be conducted in the next 5 years in terms of the tasks. So what is important is this is not just the cost reduction itself. It's more about given the fact that our business has room to grow. So the human resources could be reallocated to more sales and profit divisions, such as investment in new businesses and so forth. So we will actually finalize on the details with the DX strategy. And use of AI, we would like to have the optimal organizational structure so we can have the HR structure as well. So as we progress with the plan, we shall see the operating expenses efficiency and also per capita productivity enhancement. We shall see those going forward. Also, there will be more people engaging in sales activities, and with the use of AI utilization. So the margin of the new business and those profitability increase could be expected as well in the top line. So with the insurance bottom line's improvement, that would lead to enhancement of the adjusted profit as well as ROE. In terms of KPIs for DX strategy, we don't have any specific details here. But on a practical basis, the per capita AMP and also the new business margin, these will be considered as part of the monitoring process, and PDCA will be executed. So on a phase basis, we will be conducting the optimization. So this is not a short-term cost reduction, but these are more initiatives to enhance the profitability in the mid to long-term basis. And that is the basis for establishing our operation. That is all. So this is Moriyama. I'd like to add on some information. So for instance, AI usage and the task reduction. So once it is clarified to be used in certain area, we should be able to have some quantitative number. This time around, we are actually looking at all areas. So wherever possible, we would like to start. And also we are conducting agile development. So once that area is clarified, accordingly, we should be able to give you more of a quantitative picture. Also in terms of the HR strategy, the target is this would lead to change in the work style and how we engage in work. So what sort of talent is required? That would become much more clear in comparison to before. So the HR portfolio would be more clarified and it would be more segmentized. And of course, by having that information, we could expect to enhance the productivity. So the productivity KPIs, we are hoping that we could establish those as well. Also, the long-term, the manpower plan will change going forward. So rather than recruiting generalists, but of course we need generalists, but as much as that, we need more of a specialized talent as well. So what is the kind of number we need for each of those tasks? We could have more clarity, and we shall have more clarity in terms of the HR costs. So accordingly, after reviewing those, we would like to explain those to you. That is all.
We would like to move on to the next question. Tsujino-san from BofA Securities, please. This is Tsujino from BofA Securities. Regarding the business around bank assurance, you sold TDNF and you will be supported by Taiyo and Daido. So for Taiyo, what they have been doing as existing business, it will be somewhat curved down, but what is the plan going forward? The ones without the MBS, the savings type products, are you going to, I think you should stop selling those products. So that said, are you going to reduce those type of policies? And if so, what is going to be the impact from next year and beyond? And also at Taiyo, would you have a more proactive bank assurance initiatives? And as my second question, you mentioned that Daido would also be supporting the bank assurance business. Daido just was relatively new and are you going to exploit the new bancassurance channel at Daido? So that's the second part of my first question. And my second question is regarding the alliance with PayPay. You mentioned that you have many different plans in place. And you also mentioned that the PayPay app can sell Taiyo's products. I think TDF did not have products that were manufactured by Taiyo. But for your pet insurance, the short-term small amount policies, I think for around 2 years, it's been distributed through PayPay for the last 2 years. So what was the track record? If you could share that with us, then we may be able to see how the future looks like with more clarity. Yes, thank you, Tsutsino-san, for your questions. Regarding the bank assurance business, at Taiyo, how is Taiyo going to pursue the bank assurance business? The current product is subject of risk control. So as was presented in the material, generally we are going to be shrinking that exposure. So that's the plan. For Daido, already with the financial channel, they are selling the SME market product with the bank, and that will be continued. For the product with MVA, we're going to sell that. For that, it is still under consideration. So at this point, we have not made any concrete decision over the sales of the product with MBAs. And to add on to that, for the lump sum payment product at Taiyo, as you can see in the presentation, it is one of the tools for the sales rep channel because it can help to suppress the churn. So for that purpose, we will probably continue to sell that product to a certain extent. And as for the impact of the current product, I would like to hand over to Honda-san to respond. Yes, this is Honda speaking. So currently, the products without the MVAs, that's what we're selling today. In the past, for the losses, or the risk exposure to the losses, not the product design itself, but with the interest rate going up, the churn rate could go up, and the unrealized losses on the bond may be realized. So as a product design, that was the related risk. Right now, the products without the MBA, we are curbing down the sales initiatives, and that's in the plan. So in that sense, we have not calculated the impact of the potential growth of such product portfolio. And in the current budget, we are assuming that a certain level of cancellation will be conducted. So that is baked into our business plan. But we do not, if the cancellation goes up substantially, then there is a risk of the surrender losses or realizing the unrealized losses on the bond, and that could be impacting our bottom line. But it will be subject to the level of the cancellation and also the interest rate. And they will change subject to those factors. So I will refrain from mentioning any specific numbers. But looking at the trend of the cancellation, we will review on a quarterly basis to see if we are on track with the business plan and the guidance. Yes, to respond to your second question, Moriya-san will respond. For the pet and family policies, through PayPay, we have been selling the pet and family policies since 2 years ago. The amount of policies sold through this channel will not be shared, but looking at the recent trend, within the pet and family channel, PayPay is one of the top 3 largest channels. PayPay is a large platformer, and they have a strong customer base. Their sales capabilities are also very strong. And also for pet and family, it is a promising channel. So we would like to pursue the opportunity at this channel. And on the other hand, at the PayPay platform, there is a wide variety of product offered. So simply putting the product onto the platform is not going to lead to strong sales, and we recognize that. And as for the future plan for Taiyo Life, for the comprehensive alliance, we will work on the senior product and also leveraging on Taiyo's strong face-to-face channel. We would like to expand the sales volume through PayPay and also through marketing. We will be collaborating, and also in the adoption of AI, we will be closely collaborating with PayPay, so the alliance will not be just limited to the sales of products. Thank you. So at Taiyo Life, when I said expansion or growth, new products that is not being sold today, would you have new product launches that would help to reinforce the bank insurance channel for Taiyo? That was my question. Yes, this is Moriyama speaking again. Currently, the asset building product will focus on the sales rep channel. So that's been the decision made. So at this point, we don't have any plans to launch new product for the bank assurance channel. Would that satisfy your question? Yes, thank you.
We'd like to move on to the next question from Daiwa Securities. Watanabe-san, please. So this is Watanabe from Daiwa Securities. I also have two questions. First question relates to slide 35 about the surrender list. So on the bottom right there, so the Best Plus, it's been seeded already. But you are expecting Nagaiki Mai Kaigo, the capital, the recovery. So would you be considering to seed this? That is the first question. And next is 49, slide 49. You have the disclosure and the Viridium investment portfolio. So the private debt proportion within alternative is 66%. So direct lending, what is the magnitude of direct lending within this? So those are the two questions. So this is Honda. So the first question relates to Nagaiki Mai Kaigo, whether we would opt to seed this or not. Needless to say, various books will be reviewed whether it would be seeded and whether it would be beneficial for the company. So we do conduct the reviews based on that idea. So it is part of the scope, but nothing concrete has been finalized. So that is the answer to the first part of the question. Second part of the question. So direct lendings, the size of the direct lendings within private debt. So before we go into the size, so in terms of what's inside here, so within the credit asset, direct lending, for the mid-sized direct lending, that is, for the mid-sized companies direct lending. I believe it's almost entirely direct lending, and that is my understanding. But it's collateralized, so it's secured. So it is the highest tier, the bonds. So we believe there is a sufficient risk management in place. That is all. Thank you very much.
We'd like to move on to the next question. Sato-san from JP Morgan, please. Yes, this is Sato from JP Morgan. I have two questions. The first question is on page 10 regarding adjusted profit of 230 billion yen and how you aim to achieve that. In the guidance for this fiscal year, and looking at the guidance for this fiscal year, how should we look at this for domestic life business? Looking at this waterfall, you get the capital gains and losses that remain unchanged. But you have the sales of the Nürnberger sales, and also for Daido, the capital profit and losses are expected to go up. So if we look at this year as the base for March 2031, how should we look at the capital profit and losses? And on top of that, for TDAC, the same chart. I think Moriyama-san commented steady profit growth. But from last year to this fiscal year, on the plan, the profit is expected to go up by 15 billion yen plus. Also, looking at that for March 27 beyond, it looks like the profit growth is nearly flat. What is the reason behind that? And my second question is on page 29 regarding ESR. Especially for Daido Life, the regulated ESR, how should I think about that? From before, from the competitive landscape of the corporate market, you mentioned that you want to maintain a high ESR level. But as of March end, Nippon Life, they have the non-consolidated ESR disclosed, which was 204%. So this was a competitor that you were looking at, but against that competitor, your ESR level is slightly higher. So at the Daido, what is the ideal level of ESR? We should be reviewing that. Those are my two questions. Yes, regarding your first question on page 10, the profit increase and decrease. So as an assumption, we were looking at the March 26 and March 2031. So it's a direct apple-to-apple comparison. In the meanwhile, the capital changes are not reflected, but we are making a direct comparison between March 26 and March 31. And for this fiscal year, as you pointed out, the sales of the Nürnberger stocks and also with the sales of the strategic equity holdings, there will be sales gain on those divestitures. But if you do a direct comparison to a certain extent, the sales gain is nearly completed. And with that, the bond portfolio reshuffling has been making progress. So it's not like we are building up a lot of sales gain to reach the target for March 31. So that's why you don't see a big movement for capital gains and losses. And also for the TDAX, a 16 billion yen profit growth for the existing investments. Already within this fiscal year, we are expecting certain growth. So beyond that, it looks flattish. I think that was your question. And this is just looking at the existing investments or the businesses. So for this fiscal year, the factor behind the growth is Viridium will have a full year contribution. This is a closed book, and Viridium additional investment or the Viridium growth is not incorporated as we put some conservatism onto the calculation. So that's why we expect that to be a little bit flattish. Fortitude, we expect growth, but given the movement in the interest rate, there will be some increase in the liability cost. So that's why overall we are expecting a flattish growth. But as I said earlier, we have reflected some conservative view. So we can say that we will be able to secure steady profit. And that said, the nuance is that we expect modest growth and not decline. And to your second question regarding ESR for Daido, also we disclosed the regulated ESR, and for the first time, we are disclosing the ESR by companies. And we cannot comment, or we would like to refrain from making comments about the competitors' ESR level. But from the competitive landscape, maybe there's an issue with the channels, like the channel with the tax accountants and also the customers being the SMEs. So the sensitivity to that risk and also the longevity of Daido's product. If you look at all those factors, we believe that the ESR level for Daido should be maintained at a certain level. So to make sure that we pay the claims in full in the future, we want to have ample capital. But when we think about the group capital allocation, of course, internally, we will continue to discuss about the capital efficiency. Thank you. So regarding TDOC, so for this 500 billion yen and a new investment, 24 billion yen return from the new investment, I assume these are also quite conservative. But that said, you have the Viridium Fortitude additional investment to those two companies. Also, are you tilted more toward those opportunities? Yes, going forward, if we are to make additional investment into Viridium or Fortitude, and if the book is to be expanded, then within the 500 billion yen investment budget, we will consider that opportunity. And as we discussed in the previous IR meeting, earlier we said 20 billion, now we're saying 24 billion yen. And we will be looking at the timing of investment. And at this point, we have incorporated 24 billion yen in our outlook. But we are looking at a return in excess of the hurdle rate. So this is what we're expecting during this period. I see. Thank you very much.
We'd like to move on to the next question. Mizuho Securities, Sakamaki-san, please. Please start your question. So this is Sakamaki from Mizuho Securities. I'd like to pose two questions. First question relates to the T&D financials. This would be the first round of the review of the business portfolio. Are there any other businesses or assets that needs to be reviewed? That is the first question. And also these assets, if you were to transfer those outside of the group, what would be some of the points to consider if you were to make that decision? So that is part of the first question. And the second point, this is more of an expanded discussion, but you will be concluding a comprehensive alliance with PayPay. And various companies are strengthening the financial service through apps. And is there a possibility of further expansion of these alliances? So would there be an issue if we were to forge an alliance with entities outside of PayPay? Sakamaki-san, thank you very much for that question. After T&D Financials transfer, so whether we perceive any businesses or assets that need to be reviewed? Right now, at this particular moment, no, we don't have such assets or business that needs to be transferred right now. But of course, each of those businesses have their own issues. So on a every year basis, we would need to conduct a review. So in terms of the yardstick we employ, it really boils down to whether it would contribute to enhancement of the corporate value. Also, we will look at the future prospect and stability into the future. Those will be another items to consider. Also, some businesses are fairly specialized in certain functions. So we need to consider what sort of functionality it is serving the group and what is the kind of synergy we may expect. So those will be considered as well in a comprehensive manner. So at this particular moment, we don't have any specific business to be transferred. But needless to say, there are issues of each of those business. So on an annual basis, we need to review those and we need to iterate that. That is all. And the second part, Moriya would like to answer. So in the alliance with PayPay. So the intent is to expand the customer base and also acquire more digital insights. So this is an excellent opportunity for us to expand the business opportunities. So in terms of the comprehensive alliance, there's nothing exclusive in terms of the clause. So going forward, as a way to expand the customer base and also enhance the digital insights, we would like to explore a wide range of possibilities. Thank you very much. So the second part of the question, so when we talk about alliance, so I think it was primarily was Daido Life, but going forward, would you be considering alliance with a Taiyo Life as well? So would Taiyo Life be considering more external alliance? Is that the direction? Your understanding is correct. Thank you very much.
We'd like to move on to the next question. Sasaki-san from Nomura Securities, please. This is Sasaki from Nomura Securities. Can you hear me okay? Yes. I have two questions. The first question is regarding Daido Life-based system. I think you're shifting to cloud system. What is the progress? In the past, Mr. Moriyama mentioned that Taiyo's mainframe would be integrated to Daido system. So what the kind of discussion is taking place regarding the project on the IT system? And my second question is, looking at your group, you have Daido, Taiyo, but other than that, you have a few more group companies, which may be underscaled. So for those group companies, earlier you mentioned that you do not need to review the businesses that you have today. But why do you think that there's no need for you to review the business portfolio? Yeah, Sasaki-san, thank you for those questions. First, on your first question regarding Daido's IT system and the migration, we are making progress online in line with the schedule. And we have the Taiyo mainframe, and I think in the past we discussed about the integration of the IT system. And last year, for the full year, we discussed and verified the feasibility of the integration. It is possible, but we came to understand that it's going to be costly and also take a long time, and the impact that will be very much back-end loaded. And furthermore, with the AI agent, the evolution is happening very quickly. So the usage of AI agent is now becoming real. So we have changed the course of the overall policy. We're aiming for the same objective, but each company for now will utilize AI to achieve operational efficiency. And the platform will be commonized. And on top of that, the AI agents will be operating. And having the platform means that we achieve efficiency first, and then after that, we may think about creating shared system or commonizing some of the parts of the system. And by doing so, we believe that we can enjoy good impact in a very efficient and speedy way. So we are taking a different approach. So from the waterfall type of development, we are shifting to agile development approach. Also, with this big change in the approach, although we are aiming for the same goal, Taiyo's mainframe system do not need to be migrated to Daido's system quickly. So we will be looking at the optimal timing and also the cost involved to achieve migration. So there is a change in the plan. And on your second question, earlier we talked about scale for the core business. So do we need scale as a standalone basis? And I think that was the question. So we had the TDF as a specific bancassurance company. It had room for growth, but within the group, we were not sure if we can achieve the required growth. On the other hand, the other businesses outside of the three companies, including TDF, TDUC, I think can continue to scale up. But other than that, they still have a lot of functions that they are fulfilling. Also, of course, in a way, we are pursuing scale, but we want to spend a little more time to prioritize developing the functions for these different group companies to improve and conduct reform. And then after that, we will discuss about what to do in the future, including how we can scale those businesses up. So we will look at the phase of the company in terms of the business development, and that will lead to different decisions. So from those perspectives, we are assessing different businesses. I see. Thank you very much.
I'd like to move on to the next question. Tokai Tokyo Intelligence Lab, Majima-san, please start your question. This is Majima. Thank you very much for the opportunity. So T&D Financials, I'd like to ask the impact on EV through this transfer. So slide 8, that's for the long-term vision slide. 104.6 billion for the FY 2025, and you decide to sell at 188.6 billion. So EV one time or higher, that is the current state. So is this after tax? This is after tax, right? 108.6 billion. If you were to sell after tax, probably you'd have to transfer at 1.3 times. Otherwise, it won't pay. Those are my thoughts. So if that's the case, then so through this T&D Financials transfer, the term and EV, how would that be impacted? It would not be positive on a post-tax, after-tax basis. Is that true? I'd like to confirm. So that is the first question. Another question, please. So for TDF, so 300 or so headcount you have, I believe. So would all those people be transferred to the new the framework? And what are some of the attributes of these talent? So some of them come from Tokyo Life, and also some of them have joined the company as T&D Financials. Or also some of them may have belonged to T&D Holdings. So what are some of the attributes of those people from T&D Financials who will be transferred to this the new scheme? So as far as the EV, the term and impact for EV. So next fiscal term, that is the timing of the transfer. So in terms of the gains from the transfer will be realized. So tax related to that. So the tax amount for that EV would decline particularly for that the tax payment portion. So that is all in terms of the EV impact. And the second part of your question, Majima-san, thank you very much for that question. So all the people, human resource, would actually be transferred to the new company. So I think it was 20 plus or so. Some of those headcounts were seconded from other companies within the group. So they belong to a different company. So they will be called back. Those who have been seconded, they would go back to the original company. So up until there's 100% transfer, we would like to definitely have the business continuity. So we would like to continue with the Human Resource Corporation as well. Thank you. Thank you very much.
We will move on to the next question. Akumura-san for Morgan Stanley MUFG, please. Yes, I have two questions. The first question is about slide 45. I think you have shared this slide with us in the past. And on the right-hand side, regarding the risk related to investment, I want to ask you about the risk related to interest rate. So the last fiscal year, it seems that the interest rate risk has declined substantially, and you plan to reduce this quite significantly going forward. How do you plan to achieve that? For example, at Daido, the duration gap may be contracting, then it could lead to a rise in the sensitivity to embedded value. And if you are reducing the bond portfolio, that could also impact some numbers. So how do you achieve this plan? And my second question is regarding page 21. It leads to Muraki-san's question. Also, on this slide, the way to think about this is that you have the profit centers. So the headcounts at the profit centers would be going up. And as an image, most of the people will go to Taiyo and not Daido. Is that the right interpretation? And also, I think this will be an image of the split. So with the recruitment being curbed down, the total headcounts may be going down, and you're not expecting a big increase in the sales rep at Taiyo Life. Also, as you see an increase in the headcounts on the profit center divisions, how should I think about this? Yes, regarding your first question, the risk on the interest rate. In their previous long-term vision, we had a certain level of interest rate risk. So we matched the interest rate and tried to increase the matching by duration. And to a certain extent, we were able to achieve certain progress for duration matching. So in the current long-term vision for Daido, they have long-term liabilities. Also for investment, there's no assets that's longer than 40 years. Also, we try to do cash flow matching for that rate, and that's similar to that duration. So we will have some liquidity on hand and try to have the cash flow matching leading up to 40 years of duration, and that's how we'd like to manage the exposure. And Moriya will answer your second question. And as you said, this is the split. So going forward, with more adoption of AI, the organization and the human capital portfolio will be reconsidered. And for the total headcounts, if we need to reduce that, we will adjust by adjusting the recruitment side. And also shifting the headcounts to the profit centers. It doesn't necessarily mean sales reps. So these are the internal employees, and both Taiyo and Daido have different unique business models. And to support the respective business models, we will be redeploying people to the sales divisions and also asset management and also for new business development. So those will be some of the shared components within the group. So that's how we plan to make the shift. Thank you.
We are approaching close to the end of the session, so this will be the final question from UBS Securities. Niwa-san, please start your question. So this is Niwa from UBS Securities. Can you hear me? Yes, we can hear you. Thank you very much. I have two questions. First relates to shareholders' return. So slide 28, and also customer satisfaction. Slide 11, please. So in terms of the shareholders' return, so 60% of the total shareholders' return, I think that is a number we can expect. So the message going forward then on, of course, on a mid to long-term basis, but also on the single-year basis, would you be conscious of achieving the 60%? If you can give us some color, that would be helpful. So that is the first question. The next is about the flexibility. So I believe at the end of April, when you, and also at the time of midterm, the plan, and also May for the results, would you be considering other timing as well in terms of flexibility of conducting that? Also about the slide 11. So the customer satisfaction, 4% or higher, how aggressive it is, how ambitious it is, what is the current state, and how do you intend to enhance this? And also, as you look at these targets for the customer satisfaction, what are some of the responses from the employees? So those are the two questions, please. So in terms of slide 28 about shareholders' return, and also what are some of the suggestions for next year onwards? So first of all, for slide 28, so is the previous long-term vision. So vis-a-vis, it is related to the periodic profit. So 60% is the TSR, that is the policy. So vis-a-vis the profit for 2025, the 60% of that is what the basis for 30 billion yen. Now next year onwards, 2026 onwards, that is for the profit or adjusted profit, will we be conscious of achieving that 60% or not? So as I explained already, this is a 5-year the average adjusted profit. That would be the basis. So the cash dividend, and also with the other portion, with the total, we would aim for 60%. So the long-term vision, we do have a certain slot for gross investment. So we would also like to take into consideration possibilities of gross investment. So we are hoping to actually look at it more on the mid to long-term basis. So rather than on the single-year basis, on the cumulative basis, we would like to consider the shareholders' return. Also, in terms of the flexibility or agility of buyback, not at the in May at the time of the results announcement, rather it was yesterday. So the why was the case? That was the question. So because we had a number of very material information that needs to be released. So that is why we waited until that timing. The second question, Moriyama would like to answer. So 4%. 4 points or higher for the customer satisfaction. This is out of 5. So 4 or higher. Within 5 is the perfect score. So it is quite a significantly high level in terms of the customer satisfaction. So to maintain this high level of customer satisfaction, it really depends on the sales structure. So for instance, we have the sales rep system that directly interacts with customers, and also Daido Life. We do have the customers on an indirect basis through the channel. So we put our ingenuities together in hopes of enhancing the customer satisfaction. So from that perspective, This is not an easy target. However, we need to actually aim higher to be the choice, the company by the customers. So that is why we intend to go higher than this previous level. So in terms of response from the employees, none of them have directly mentioned that this is very challenging, but I believe many agree that this is indeed a challenging target. They may not say that verbally, but I think it's identified across the board that this is a challenging target. That's all. Thank you very much. That was very referential.